Leslie, what's the thinking here? I mean, how do they get to 7 times the worth of the company that's already publicly traded?
That's a good question, Trish. And if you look at those numbers that you just showed on the screen, they're nice, whole, round numbers. This is becoming somewhat of a game out there in Silicon Valley. You look at Uber at $40 billion. You look at Snapchat. Everyone is racing to be among that top tier of companies, of startups out there. And when you think about an IPO, a potential IPO in the future, I'm told by sources that there is a disconnect out there between what public investors are willing to pay and some of these private valuations. I'm not saying that Airbnb is one of those, but there is, by and large, a disconnect.
Well, at some point, these investors need to get their money back. So you're going to do that either by selling the company to another or by IPOing. What's amazing to me is that it seems as though the private markets have valuations that are higher than what you would see in public markets. So ultimately, how do these guys ever make their money back?
That's the big question right now. And I was just out in San Francisco, and that's what everyone is talking about. If you're a $40 billion company, you can't really sell yourself. There are very few buyers who have the kind of cash that would pay for a $40 billion Uber, for example. But what you have to do, of course, is what they're continuing to do with Airbnb's round, $1 billion. That's bigger than most IPOs you're going to see, especially most tech IPOs. So they're going to keep raising this kind of private financing while the money is there, and hopefully hold off until they can do an IPO at valuations that are agreeable with what they're valued at the private market.
I guess that NASDAQ 5,000, watch out, it may be going higher.